Good afternoon, everyone. A warm welcome to today's exclusive webinar on live trading market, hosted by BlinkX and powered by JM Financial. It's a significant session, especially with today being an expiry day. We're joined by Mr. Akshay Bhagwat, our esteemed research analyst, who will be sharing valuable insights and setting the stage for today's discussion. Welcome, Akshay. And to all our viewers, if you have any question related to the derivative segment, feel free to drop them in the comment section. Our research analyst will be addressing your query live during the session. So stay tuned and make most of this opportunity. And over to you, Akshay. Please take over.
Thanks, Niharika. Good afternoon to all. Welcome all to the live webinar of BlinkX. So today is the expiry day, the weekly expiry for Sensex, the 9th of October expiry. And we will be taking you through in our very short webinar as to how you approach the weekly expiry with almost 3 hours to go for the expiry. So first of all, if you look at the chart setup, because we are talking about technicals and derivatives today, the day started positively. We opened at roughly around 81,900 odd levels on the Sensex, and post opening, leaving aside the initial bouts of price volatility, the markets have been on a positive ground. There has been good recovery considering the fact that yesterday's trading session was a bit muted or a bit off. There was some bit of a consolidation yesterday, and today we have almost tested around 82,150 odd zone on the upside in Sensex. So the trend on basis of price charts is positive. If you were to look at the options reading for today as to how the call and puts are placed, the highest open interest, if I were to look at the calls, so there is a significant chunk of open interest writing which is present at the strikes of around 82,000 and 82,200. So the exactly the at the money strike where Sensex is, we are at 81,987 and 82,000. So it's at the money strike has a significant chunk of call writing open interest, which was built in yesterday's session. So we are trading at a resistance. This is the first signal which is given by the options data. Now, if you were to look at how the put writers are positioned, then the highest put writing, if you were to see from the options chain, is somewhere around the strikes of the highest open interest change is around 81,800. So 81,800 roughly is the support zone for today, where significant put writers have shifted their positions. Initially, it was 81,500 where put writing was, or the highest put writing is. Some open interest put writing or the new support which is defined for the next 3 hours of trade is 81,800. So now the clarity we have is that we are getting a range for today. Now the range for today is, as I mentioned, is the resistance of 82,000 to 82,100 zone, and the support for the index, that is the Sensex, is somewhere in the range of 81,700 to 81,800 zone. We have this range in place. How do you trade the day? My sense is that it's going to be more of a range bound day from here on for the next 3 hours. So buy at support, sell on resistance. That is how the Sensex might play out for the remainder 3 hours which are yet to go. So couple of strategies I would discuss. One is, if you're an option writer, how do you approach the day? Or if you are an option buyer where you're only keen on vanilla options buying, the hero zero trade which everyone looks forward to. So first, on the options writing front, our option writers can go for strikes. I will tell you exactly the strikes based on the premium reading. So right now, 81,000 500 strike as 9.8 rupees premium. We go for 81,600. So we opt for safer strikes in puts because puts are always vulnerable to sudden option premium jumps. So sell 81,600 put, which is roughly available at around 13 to 40 inflow which you get on selling this put. And in calls, you can go for selling strike of 82,400 at a premium of 19 rupees. So selling a call and selling a put gives you a net inflow of around 30 to 35 points. So this is the maximum target. The probability of success of this strategy is almost over 75 to 80%, that Sensex will expire in the range of 82,400 on the upside and around 81,600 on the lower side. So this is a very comfortable range we have set for option writers. This is the best strategy to go about if you are satisfied with writing options, where we call this a short strangle strategy. And 30 to 35 points is the best scenario where you can pocket in the entire premiums with 3 hours to go. Stop losses will be the extreme end of the range below the 82 400, below 81 600 level in Sensex, and 82 400 on the upside. In case worst case scenarios these levels cross, then you have to cover up or exit the strategy in the loss. So this is what an option writer, this is how an option writer will approach the day. If you're an option buyer, what will you do? So really at this point you have to wait for some momentum, and I would wait a bit for some bit of correction, a dip, or a lower price to play an options buying game. So ideally, if I get Sensex in the range of 81,800, which is almost a dip of roughly around 200 points from the current market price, that is a good buying point for me. Second is if the Sensex rises to 82,200 on the upside, that is a put buying point for me. So clearly, I have defined the range. I will give you the levels roughly where you can place your trades. So which strikes you have to look for. So I'm assuming we fall 150 to 200 points in the second half, where you try to buy. Now, whether it will fall or it won't fall is the question mark, and hence we are not taking any action at the current market rates. So if in case there is a fall of 150 200 points, you have to keep a watch at the strike of 82,000 strike in calls, which is roughly trading now at 140 odd levels. So with a fall of 200 points, this 140 call easily will come down to around 50 odd rupees. So at 40 to 50, you can buy the 82,000 call on dips with a stop loss of 0, and you can keep a target of around 85 to 100, which is almost a doubler. So this is the best trade which works out for today. In case you do not get this trade and the markets move higher from the current rate, you can look to buy puts of 82,000 per strike, but not now, with a jump of 200 points. If that jump is seen, then the put of 82,000, which is currently trading around 86 odd rupees, will get down to 30 odd rupees, 30 or 35 to be more precise. And that is the point where you can take a hero zero trade in puts at 82,000 put at the levels of around 30 to 35, stop loss 0. First target will be 60, second target will be 75. So this is the trade setup for today. Second half, I believe it is buy on support, sell on resistance. At the current market, there is no actionable. So we are waiting for some action to take place before we set our trades. The action is 200-point falls. We are buying calls. If it goes up by 200 points from the current rates, we are buying puts. If it stays where it is, please do not initiate any trades in option buying. That is the suggestion for today. So all the best for the next 3 hours of the weekly expiry, and have a good trading session with BlinkX for the Sensex weekly expiry. We open the floor to question and answers.
Thank you, Akshay. Akshay, we have a couple of questions. One of them is, are you noticing any early trends that could define the market tone for the rest of October?
Uh, See, my sense is that the markets are positive. Now, the reason is that if you look at the way the markets have been moving lately in the last 1.5 month, it is broadly volatile if you were to sum it up from a monthly perspective. But whenever a move is triggering in the index, it is going one way or a directional move. For example, the September first 15 days was when we had a rally of 1,000 points. The remainder 15 days of September was a time where we fell by around 800 points. And the last 5 sessions is a session where we rose almost by 400 to 450 points one way. So my sense is that this move from here on, which will be for the remainder part of the October series, will be a one-way move where the Nifty will try to retest its swing highs of 25,500 plus. So I maintain a positive view on the index. I'm looking at possible targets of 25,500 plus. The support zone is 24,800. Stop losses will be below the support. I will maintain my positive view till Nifty trades above 24,800 for the target of 25,500 plus for the month of October.
Okay. Thank you, Akshay. We have one more question. How do you see defensive sectors like FMCG or pharma behaving in this market environment?
See, right now, pharma and FMCG, as you rightly mentioned, they are defensive bets. So, defensive bets work best when A, the markets are very choppy on a short term basis, or B, when the trend for the underlying index is weak. So, normally the money then flows to the safer counterparts, which is traditionally the IT, the pharma, or the FMCG. So, currently, we are in a situation since the last 5 days where banking and the financial services space is hogging the limelight. There have been breakouts of price development in both of the indices, that is the banking and financial services. And normally, whenever the breakout or positive momentum picks up in the financial and banking services, it is considered as a positive market sentiment from a broader market perspective. So the leaders have started moving, and I believe when it is the time of the leaders to move, the defensives will take a backseat. So I think if we are talking about pharma and FMCG, they might remain a bit muted, or they might be not give you the returns in case they move, uh, uh, which will try to kind of beat the beta of the Nifty. So my sense is, if you are trading for the remainder part of October, invest or
Mm-hmm.
trade in high beta stocks like banking and financial services, where your returns will be mirroring the returns of the indices.
Okay. We have one more question. It says small cap, mid cap may fatigue. Okay, okay, okay. The question says कि mid cap and small cap are, he says mid cap and small caps are continuing to attract participation. Do you have a sense? Do you sense fatigue or anything over there? That's how I understand this question. Yeah.
See, what I understand looking at the mid cap 150 charts. Now, again, if you were to look at the last 3 months, again, it's the same story. When it falls hard. When it recovers very strong. And the mid cap 150 index too has seen a good, strong one-way rally in the last 5 to 6 trading sessions. And the broader market too sums up that this sector is positionally strong if your view or the time horizon you look forward to is over 3 months. So I think there is no signs of fatigue as yet. It is fatigue if, yes, you are an intraday trader or you have short stop loss, small stop losses which you are working with. My belief is that looking at the broader chart structure, there is strength in the mid cap index, and this strength will show up once the entire range which this index has been building up since the last 3 to 4 months will stage a breakout. So, yes, this is the time where you need to accumulate and kind of be in the right stocks, which will give you the right kind of returns, or the breakout kind of momentum based returns which you're looking of for. But this will all happen subject to the mid cap index breaking out, and my sense is this will happen probably in the next 1.5 to 2 months time frame. So I'm positive on the mid cap index as well. I do not see any signs of fatigue as yet. It is just a sideways corrective time consolidation which we call on the technical charts, and sooner or later, it's just a matter of time, this will give way to a positive breakout in the days to come.
Okay. We have, thank you, Akshay. We have some, we will wait for another 10 seconds if we get any question during this time. Uh, okay, Janak says hi, hi. Okay, some basic questions. Okay, we have one more question over here. Okay. It says, are you observing any interesting patterns today in the charts?
Uh, See, interesting patterns. See, Nifty, I'm bullish.
Akshay? Yeah.
Intraday, yeah. Intraday, I mean, stock market pattern is low, but I think chasing momentum based stocks, then you have to be positioned in a banking pattern. Specifically, since your question is, we have broken through an inverse bullish head and shoulder pattern in Bank Nifty, which promises you a target of 57,000 plus. Last couple of days have been a cool off in Bank Nifty, but I'm presuming that this uptrend should resume soon, and Bank Nifty should be working its way all up to 57,000 plus targets. But again, if a choice has to be made in stocks, my thought process is that PSU banks have a fair share of runway for the next 12 months. And in this case, if Bank Nifty goes by the pattern, it should be the private banking space which should support the bank index. So specifically, names which you can look forward here would be an HDFC Bank, an ICICI Bank, an Axis Bank, and in the mid cap banking space, you can look at Federal Bank, where we have active call or open recommendations open from both the fundamental and the technical research team.
Thank you, Akshay. Thank you for this. Do we have any other questions? No, I think we're done for the day. The questions have stopped coming in. So let's wrap this session up. Akshay, is there anything you want to conclude before we wrap it up?
Yeah, I think now it's the festival time is coming soon, and from our research team, soon you will be getting our Diwali picks. So you should be actively looking forward for our Diwali recommendation, because if you were to pull up our historical records of how our picks for Diwali have worked in the last 2-3 years, they have given spectacular returns. So leave the stock cherry picking job to us. We will make life more easier for you. Log in through BlinkX. You will get all the live trading calls on your portal. And I think this segment is what you need to watch out for in the coming days.
Yes, thank you, Akshay. Yes, we will be having our Diwali webinar also. Currently, our date as of now, we're going to go live is on 17th of October, Friday at 4 p.m. by Tejas Shah. We will be confirming the dates shortly with you within a day or two. It will be up, or you'll get notifications on your app as well as on our social media platform. So stay tuned. Okay, Akshay, do you have a minute for one question? I think we have last one by Vicky. Are you open for it? For a quick,
Yep.
like a minute or two? Yeah.
Yep.
So he says, I'm a BlinkX user. I sell Nifty at 25 to 100 at call option and 100. Your views, please, on if he wants to sell Nifty at 25 to 100.
See, the thing, you're selling option calls, and really the question for me is, which weekly expiry have you chosen for selling calls, or is it a monthly expiry? Because both are of different time frames. So first of all, I would just like to kind of mention again that my view for Nifty is positive, and I'm looking for targets of 25,500 plus by this month end. So if you're a seller in calls with 28th October being your expiry day, the suggestion is don't go for selling calls. If you have sold, look for an exit or exit at current market price. That is the recommendation. Now, the other thought process is, if you have sold 25 to 100 call for the 14th October weekly, which is next Tuesday, then you might wait it out a couple of days more, because Nifty is somewhere caught in a range of 25,050 to 25,200 range. So give it a couple of days more time. For these 2 days, you can maintain a strict stop loss about 225 basis spot Nifty. So in case these levels were to cross, you have to immediately cover up your call writing trades for the 14th October expiry. So I will just like to suggest that this is not a recommendation of call selling. I'm just recommending you a risk management strategy, because my view is positive in Nifty, and you need to be prepared for the worst case scenarios and have your risk management in place, because Nifty most probably is going for 25,500 in this month.
Okay. We have one, actually, we have two more questions. Jiska, you already answered one. So, Anamika is asking Nifty is up or down today. Anamika, Akshay just answered his views are positive on Nifty today. So, we'll take the second question by Tanaji. What's your view on Reliance Industry? If you can just touch upon it for a minute or two.
Yeah. So for Reliance Industries, See, it is more of a trading view. We are not looking at a positional view in Reliance. What I understand on basis of chart trading based on price volume action is that in the last couple of months, Reliance has been confined in a trading range of 1360 on the lower end and 1420 on the upper end. And it's been choppy within this trading range. So in case you have a buy position in Reliance, 1420 is the target you can look forward to in the month of October. As a risk management for keeping a stop loss, it should be below 1340.
Okay. I'm very sorry. This is the last question. We have Rajesh. Rajesh is our viewer. He's our continuous viewer, a very loyal follower too. So Rajesh wants to know what's your view on SBI Bank for this month? And this is the last question we'll be taking. We'll be wrapping up after this. So last question for for Akshay by Rajesh is your view on SBI this month. SBI Bank.
SBI for this month has hit its crucial resistance of 875. This is a very important resistance. If I were to pull up charts since the last 4 or 5 months, multiple times the prices have failed to get past this resistance. Hence, I'm giving more importance to this level. So, although the longer term charts are positive for SBI, since we are only talking for the month of October, I think it will be difficult for SBI to cross 880 for this month. So either scenario one, it stays in a range of 850 to 875 for the remainder part of the month. Or scenario two, which unfolds, can be there might be a slight correction in SBI till the levels of 840, which will be a good re-entry level if you are planning for a positional perspective with a couple of months view in SBI. So I doubt SBI is crossing 880 in the month of October.
Okay. Thank you, Akshay. Thank you so much. Okay, Abhishek Pandey. So, you know what I'll do is I'll be online. What we can do is I will share you my email ID, our email ID. You can send us questions on that. I will get in touch with Akshay and ask him to reply to your questions. But we will have to end this webinar now. Abhishek, just be online. I will be there. I will stay with you and I'll share you my email ID and everything. Just give me a minute. I'll just wrap up this session. Thank you, Akshay. Thank you for being a part of this webinar. I think today was a very interesting session for us. We had a lot of interesting questions as well. Uh, so we'll wrap it up. I would like to say thank you all for being a part of this derivative webinar. We hope you've gained valuable insights. For more market knowledge, tools, and strategies, stay connected with BlinkX, powered by JM Financial, and have a great day and happy trading. Thank you. Abhishek, give me a minute. I will be sharing that email ID with you. So Abhishek, what you can do is you can mail us on let's talk at blinkx.in, and either you can address it directly to me. My name is Niharika Shetty, or you can directly address it to Akshay with the subject line live market webinar. What I'll do is I will take your question. I'll get in touch with Akshay. We'll answer your question and we will reply you on the same email ID that you have shared with us. So thank you all. Thank you for being a part of this webinar, and over for the day. Thank you.